Friends, I hope most of you are doing investment in shares of good companies like Reliance, like Adani. So, whenever we make investment in any shares, whether in IPO market or in secondary market, so there is always a concept called intrinsic value which can be used as a benchmark for making such rational investment. Why intrinsic value is taken as a benchmark for the purpose of investment decision? Because whenever market price of a shares is less than or more than our intrinsic value, there is always a scope of making profit. So now understand what is intrinsic value. But before that, let me tell you there are two approaches to understand about to estimate the share price of a company. They are fundamental analysis and technical analysis. So fundamental analysis is basically used by those investors who want to make investment for long term horizon. The horizon could be 5 year, it could be 10 year or even more. On the other hand, technical analysis is used by those investor, speculator, arbitrator, those who want to earn money on intraday basis or even weekly movement of share price. So today I am not going to discuss about technical analysis or pricing pattern, price action, candlestick pattern, because I have already discussed about this topic in my past videos. But my today video is basically dedicated only to the fundamental analysis, and this is for the long term investor who have a horizon of more than 5 years. So let us first of understand what is intrinsic value. Intrinsic value is value of a share which is calculated using the examination of the financial statement of a company, that is called intrinsic value of a share. So there are many methods through which we can calculate the intrinsic value of a share, but I am not here going to talk about how intrinsic value is calculated. I am assuming that there are a lot of softwares, there are a lot of apps, there are a lot of research paper published in the newspaper who are already calculating intrinsic value. I am just going to discuss about the rationale behind the intrinsic value. So with this, let us discuss what is fundamental analysis process. So fundamental analysis is a process of evaluating the company intrinsic value by examining its financial statement, its business model, and its broader economic environment. The goal is here is to determine if a stock is overvalued or undervalued, and relying on that verified financial data rather than short term price trend. To conduct the fundamental analysis properly, we should have to evaluate qualitative and quantitative aspect of the businesses. So here is, let us discuss step by step approach. So first of all, we need to understand, we need to evaluate the macroeconomic as well as the industry analysis of the company. So in macroeconomic factors like GDP growth, interest rate, exchange rate, inflation, there are a lot of other parameters that we can be used for the purpose of the macroeconomic analysis. On the other hand, the second aspect here is industry analysis, wherein research industry trends, market size, regulatory risk, company position relative to its competitor are analyzed in detail. Second step is assess qualitative fundamentals. So what are the fundamentals? Qualitative fundamentals of a company includes its business model, management and governance, and competitive advantage. So business model, like company, how company makes money, what are its target customers, what are its products. Management and governance, here we evaluate the experience of the management, track records, integrity about the company, executive leadership. Then in competitive advantage, we basically look for economic moat such as strong brand recognition, patents, or a monopoly that protect the company from its competitor. Third is to analyze the financial statement. In order to analyze the financial statement, we analyze income statement, we analyze balance sheet, we analyze the cash flow statement of a company. Then finally we evaluate the financial ratio and we calculate the value of intrinsic value. So for valuation we use P ratio, we use price to book ratio to determine whether stock is cheap, whether stock is expensive. Then we use profitability. Here we use basically return of equity measures, how effectively a company uses shareholder investment to generate profit. Debt equity ratio, here we use to measure how much debt the company uses to finance its assets compared to shareholder value. So accordingly, and then fifth and last step is to estimate the intrinsic value. That is our aim, to understand and to estimate the intrinsic value. Finally, compare your research with the current market price. If the intrinsic value you calculate is higher than the current stock price, prevailing stock price is considered undervalued and potential to good buy. Or you can use valuation models like discounted cash flow analysis to form a more precise price estimate. So, finally, with this I conclude. First of all, you need to estimate the intrinsic value. There are many sources available in the market through which you can estimate the intrinsic value. Then you need to compare this intrinsic value with the current stock price, whether it is undervalued and overvalued. Accordingly, you need to take a rational decision. No need to take haphazard manner decision about any investment. So always take a rational decision and accordingly put your investment in those shares. So friends, hope you understand about the fundamental analysis that I have explained in briefly. In my next video, I will be discussing more about fundamental analysis, or even more about technical analysis too. So with this, I close my video for the day. In my coming video, we will discuss in detail about all these aspects of finance. I hope you are understanding what information I am sharing with you. If you like my video, please share my video, comment on my video, subscribe my channel if possible, and advise how best video I can prepare. So friends, with this I close my video, and God bless you. Enjoy your days. Thank you very much.